I'd like to welcome you to our hybrid June 11th three-stock lunch. This is a series of luncheon symposiums we offer in New York roughly 8 times a year. And to be a little hybrid about it, we've decided to give you some of the highlights for you to take a look. These will be short 15 to 20-minute videos. We've done 2 before. I think they're worthwhile checking them out, as well as the companies. We started this particular one because it's a gold seminar with a talk by Jeff Christian, which we will present to you, the highlights. We then have 3 companies that we'll just introduce to you for a minute or 2 each, and I think all of them are worth going to their website, downloading and putting on your trading screen, but you have to make your own decision. But in 2 minutes you'll have some ideas. And then our latest WABC interview. So I think, which is a radio thing. So this will be all short, but we think it's information-packed. As we're talking, the markets are way down. As you know, it was sell in May and go away. We said definitely by June 15th. We came in a little earlier, but that's our nature. So there's a lot going on in the markets. So we begin first with Jeffrey Christian. And Jeffrey, is of course very well known. Before I do, I just realized 2 points. Number 1, a disclaimer. Basically, do your own due diligence. And secondly, to let you know that everything we do now as investors, not traders, is for November 2026. Don't think about this week, next week. Think about where markets will be. And there's no question that in 2025, that good stock picking is greatly outperforming index funds and will continue to do so. Wrong place. Where's this? Here we go. Jeff. Nice. Let's get Jeffrey here. Let me just shut off my mic.
Hello, it's Jeffrey Christian of CPM Group. I spoke to the Astrologer Fund Luncheon in New York on Wednesday, June 11th. Henry Weingarten of the Astrologers Fund asked me to speak a little bit there and on this video about gold and silver facts and fiction. I spoke mostly about the facts, but there were a lot of fictions that I felt I needed to talk about. In terms of gold, the big fact is investment demand. Investment demand has risen strongly over the last couple years, 2023, 2024. We expect it to remain strong, if not move higher in 2025. The reasons are manifold. Investors are buying gold because they're worried. They have tremendous anxieties and uncertainties about the risks that are present domestically and internationally, politically, economically, socially, intellectually. And they're buying gold and silver to protect themselves and diversify their portfolio. That's the single most important factor that's been happening in gold and is continuing to happen in 2025. Central banks have been buying gold, and it's interesting because the central bank trends span the scope of facts and fantasies in gold. Central banks have been buying a lot of gold really since 2008, on average about 10 million ounces a year. They bought about 8 million ounces in 2024, and they're on pace to buy much less this year. That reflects the higher price, among other things. Central banks have also been distracted by domestic and international economic and financial market conditions that have demanded a lot of their attention. But the reality is that while central banks continue to buy 8 million ounces of gold last year, that was 40% less than they had bought in 2023. Again, a reflection of the price. The price was up about 25%. The amount of money that the central banks were spending on the gold purchases were down about 25%. About 25%. So central banks are buying gold, but they're price sensitive, and they tend to buy gold in terms of how much money do I want to spend and put into gold in my monetary reserves. And as the gold price has risen, they're buying fewer ounces of gold with less money in 2024 than had been the case in 2023. One of the fantasies that I was talking about at the Astrologers Luncheon, Fun Luncheon, was that the gold is there in Fort Knox, and it has been counted in a thorough bar-by-bar audit and an analysis of sample bars that took several years in the audits. I had at the luncheon the bar list provided to me by the ultimate denier, Ron Paul himself. Ron, at least 10 years ago, had the complete audit. It was hundreds of pages, counting, weighing, sampling, and checking against the bar list every bar that the U.S. government has in its monetary reserves. We also talked a little bit about governments and foreign investors, how they're not dumping the dollar. The dollar is actually up from where it has been in recent years, over the last few years. And Treasury holdings offshore internationally held treasuries are actually at record levels, something north of $9 trillion. So governments and foreign investors are not dumping the U.S. dollar, and they're not dumping the U.S. Treasury. I also spoke about how Basel III means nothing to gold, and the changes coming in July on the BIS banking regulations actually have nothing to do with Basel III. In terms of silver, it comes down to investment demand. And investment demand rose sharply last year. Our expectation is going to rise sharply again this year, even more so. The price of silver has been restrained by disenchanted silver investors selling into the rally over the course of 2022, 2023, and 2024. Our view is that a lot of that disenchantment has dissipated now, and the gross sales are probably down, which means that the gross purchases, which have been strong, will be reflected in higher net purchases in 2025. I also spoke about how there are no deficits in silver. If you're an honest analyst, you see surpluses in silver that are being bought up by investors. Strong fabrication demand has not been the driver behind the recent silver price strength. It's investment demand. I also showed some information. The world's not running out of mineable silver, and above ground inventories are not running dry. They're actually at record high levels right now, even with the sales by some disenchanted investors. And those are investors who bought in 2021 with the Wall Street silver scam and the silver squeeze scam. And they bought at high prices. They've been sitting on losses. And now with the silver price back over $30, they're selling it again for profit. That's all I have for now. Thank you. You can go to our website, cpmgroup.com, and read all about our research, buy our yearbooks. You can go to our YouTube website and see twice weekly videos that we make. And you can write to us at info@cpmgroup.com and ask us how we can work together for your benefits. Goodbye.
Well, thank you, Jeff. That was good, of course. Okay. The first company, we had three companies presenting. First was Revival Gold. And I want you to look at the chart here. If you notice, in this year and in many years, it outperforms the physical. And this is a point we have, that if you are bullish in gold and silver, you can buy gold and silver cheaper and make more money by buying quality stocks. That's important. There are thousands of companies, and maybe only a few hundred at tops are good. This is one of them we think is good, Revival Gold. And the reason we like it is the cost is less. It's about $10 an ounce. If you look over here, 30 ounces of gold for less than $400. Not bad. And also, they're reasonable size. It's a good location. It's low risk, short timelines to production. So Revival Gold, one of the companies we like, and they're in the United States. So we have a safe jurisdiction. Take a look at it. We recommend it. Another one we liked is Soma Gold that we've tracked for multiple years. Again, look in the last few months. If you believe gold and silver are moving up, you certainly want to be in good stocks. You make another 50%. If you believe it's going to go down, as we do, it will stabilize and then will go up because it's trading as if gold is $2,200 and silver is $22, which is not the case. So Soma Gold is another company we like. It has strong operating cash flow from production, low overhead costs. It's building shareholder value, and roughly within 2-3 years, zero debt, and it has more than capacity coming on board, and it will be dividend. These are things we like. These are small companies that are growing. Soma Gold is another one. I recommend going to their website and putting it on your trading screen. And our third one is DRD Gold, which has been a favorite of ours. Again, you see in the last few months, it's been outperforming. If gold and silver goes up, it will continue to outperform. This is the only South African stock we have in our portfolio. It's very easy. There is no gold exploration risk because they're simply taking and cleaning up the mines and the tailings. So no exploration risk. It's socially, environmentally responsible. If you think gold mining is a dirty business, which in the old days it was in many cases, it's not. This is the one you want to own, and it's an expanding company. If you look at it in some detail in the next 2-3 years, we expect it to be much larger. It's well outperformed in the last few years. DRD Gold, a multi-billion-dollar company, and the other ones are smaller. We like high risk, high reward. But this is also a company I think you want to take a look at. So we ourselves are basically selling gold and silver. We're short at currently 3,500 and 3,450. We were short at 3,400, sold that out. We also take profits very quickly. We don't just hold it. And silver we had sold at 34 when it went down towards 30. We will be selling it at 38 if we get the opportunity. But whether you do that or you simply want to buy gold and silver stocks, we recommend it. And again, if you're bullish, gold and silver, quality companies will very well outperform. So now I'm going to let you hear my radio interview. We actually have another 3 picks, and we think that all of these are worthwhile tracking. So this is my latest WABC radio interview.
You're listening to one of the most iconic stations in the nation, an American original. Talk Radio 77 WABC and WABCRadio.com.
For many years, astute investors have closely followed Henry Weingarten, a market analyst based here in New York City. At present, Henry has a carefully thought-out view of the current market and beyond.
Big question that a lot of fund managers had is this a time to have sold in May and go away? That is to say, will the markets be lower between now and September? Our view that is very likely. That's number one. I want you to think about that. Previously, index funds have done very well, but that's not been the case as well in 2025, where actively managed funds, especially those that do trading, tended to outperform. Our view is if you're an investor, you should be thinking about your portfolio, what it will be in November 2026, because that's what the president is thinking about. All the actions that you see coming out of the White House and in Washington are not geared for next week, next month. They are geared for November 2026. So when we talked last time, we mentioned the fact that there was no question in my mind that as we get to the midterm elections, you will see the prices of eggs lower, you will see the price of gasoline lower, and you will also see bond and interest rates lower. And of course, within a month or two, we did see eggs dropping, although they're going to come down further. We certainly have seen gasoline prices drop, and short term, we will not necessarily see interest rates drop, but as we get to August, September, and especially next year, they will drop. So think about that, and how will your portfolio be in 2 years? Now, if I may mention a little bit of astrology, there's an aspect called Saturn-Neptune, and this is why we are seeing increasing fear and uncertainty among investors. Saturn being fear, Neptune being uncertainty, and the classic statement is a rock on a cloud. It's a recessionary element. More than 50% of fund managers believe that we'll either be in a recession this year or beginning of next year. And if it's not a recession, it's a global slowdown. So whether or not it's minus 0.1% or whether it is plus 0.02%, there is no question that there is difficult times, very uncertain times, and it's a question of how do you deal with it? Do you want to deal and trade every single day, every hour, or do you want to have a portfolio that can last over 2 years and that will go and increase in value?
Recent volatility in the markets, Henry Weingarten has his view.
Market rallies at the moment are primarily due to the lack of bad news, not because of good news. And if we see almost on a daily basis, depending what's happening with tariffs, what's happening in the Ukraine, what's happening in the Middle East, on certain days the market's up, and then sometimes the same day or within a day or two it totally changes. This is not because things are better. There are, of course, companies doing better, but in general, they are not increasing in profits, and these are increasingly difficult times.
Henry Weingarten also has a very interesting view of both physical gold and silver and precious metal stocks.
One of the sectors that we like to invest in is in gold and silver. Gold and silver obviously have done extremely well this year. Many people are starting to look at them who never looked at them beforehand. However, we have a very different view because in our view, gold and silver are quite overvalued. We went short on gold at both $3,500 and $3,400. We went short earlier on silver at 34, closed our position, and now as we get to 38 to 40, we plan to go short again. However, while doing this, we also are buying precious metal stocks, good gold and good silver stocks. Why is that? Because they are extremely undervalued. Most stocks today are trading as if gold is $2,200 and silver is $22, which is not the case. If I'm wrong and you happen to be bullish on gold and silver, then you will see with some good companies they will well outperform the physical. Gold is currently trading as a crisis metal. It is our view that crises will be less as the year goes on. That means gold is going to retest the 3,300 and probably the 3,000 level as well. Silver, on the other hand, in addition to being an investment metal, is primarily an economic indicator. And given our views that we're going into a recession-like environment or officially a recession, then it will do less well, less demand, although there is, of course, overall increasing demand. And I'm speaking now over the next year. If we're talking on a 2 to 3 year basis, then, of course, the situation is very different and more bullish for the economy.
And at the present time, Henry Weingarten has his picks in the market.
3 stocks that we like, and there are, of course, many more, and we put them on our website and on our YouTube account. Let's take silver first. Our current favorite for silver is called Vizsla Silver. It is a Mexican silver play, extremely rich. How rich? At current values, the IRR is 100%. Should silver drop from, say, $34 or $36 to even $22, their IRR is 70. So what does that mean? If I hold this stock for 2 years, our projection is anywhere from 50% if the markets drop, that is to say the silver markets drop dramatically. If they stay where they are, our projection is over 100%. And should silver stay and maintain over 38, our projection is over 200% on a 2-year basis. So for us, a 50% to 200% projection is something you want to definitely take a look to see if it's appropriate for your portfolio. A second company we like, and we've spoken about royalty companies before, is because there's limited downside risk because they don't have the expenses. There's a limitation on a royalty company where you're getting a percentage of the silver or gold mined, but you're not paying for any of it. You bought it earlier and you're just collecting like a rent check. So there's limited downside and very good upside. One of the ones we're recommending is called EMX Royalty. And the reason we like EMX is it's globally diversified, many different sources, because if you only deal with one or two mines, there could be problems. When you're dealing with dozens or hundreds, much less a problem. And the reason we also like it, in addition to collecting it, they also generate royalties. So they're a combination of a royalty company and a company that's a development company. The third area that we like are special situations, and there are two types of special situations. One special situation we like, especially for conservative investors, are companies that will make money regardless of the economy, whether we're in a recession or whether the markets and the economy is in fantastic shape, they will make money. Our favorite one for that is Acme United. And Acme United is positive for a number of reasons. This is a company that it's basically a global manufacturer, but increasingly so onshoring back to the U.S., which is one of the things we like. So they're benefiting as well as participating from the U.S. reshoring trend. They're financially well positioned. And obviously, if we're in a recession, companies that have a lot of cash, companies that have a lot of income and manageable debt will do better versus companies that are in distress, because we think distressed investing is a good area to be in. And a company like Acme United, who has bought many companies, is likely to, in this year and next year, acquire more distressed companies to increase their portfolio. Its sector defense is defensive consumers. This is a safe haven area because they have consistent dividends and stable earnings, regardless of the overall state of the economy. But there's another reason, because we always like more of a kicker. It's transforming into a health sector stock. Traditionally, they did things like manufacturing scissors, and the odds are if you have scissors, you've got them from Acme United. But they're increasingly in things like first aid kits, industrial safety solutions, and these are things that you must buy year in and year out. And we believe they'll be re-rated over the next year or two, and we know funds that are starting to look at them that are healthcare funds that are now going to put them in their portfolio. So Acme United is another company we like. And one more example, of course, Cal Maine Foods. The symbol is CALM, which is one we were playing before. That's a major egg manufacturer because we tend to eat eggs every day. That's not going to change. There are quite a lot of others. There are many special situations. There are companies that go way up based on the news. For example, last week we were at a conference with a company called Xenotech. It was a drone manufacturer, but what they're doing differently, it's a drone as a service. That is to say, suppose rather than buying drones, rather than maintaining them, rather than training operators and pilots, you can rent them for a particular operation. If I want to use them for a parade, if I want to use them for a fire, you can rent them. Anyway, they did a presentation as an example, and you know what's going on with Ukraine, but how all the Russian airfields were attacked, and it's becoming a major part of defense and the military. So it's on people's radar. They did a presentation at a conference we were at. They normally averaged about 1.5 million shares, which is nice. They did a presentation. The next day, 120 million shares were traded, and the stock nearly doubled. Now, of course, it's down a little bit because when you have such a tremendous change, people take profits. But there are many special situations, and over time, we can give you some very aggressive companies that are much higher risk but have this potential for going way up. And we have a list of those we'll give in the future. But at the moment, I would suggest being conservative, not to panic. I do think things will slow down. It's not the end of the world. It's not a depression, but it is recession-like for many people, and you should prepare your portfolio. Remember, the prices are extremely high. They're not nosebleed level, but they are extremely high. So outside of a few special situations, they are likely to go down between now and September or October, which is when we very often have markets drop. So I'm not saying to sell everything. There are many ways to deal with this, but make sure you have cash to buy. We recommended it previously, and be conservative. Nothing wrong with having a certain amount of aggressiveness, or if you're a trader, but if you want to just have a relaxing portfolio, take a look at sectors that will do well regardless of how the economy does.
Thank you, Henry. Henry Weingarten, a highly respected market analyst based here in New York City.
The #1 talk station in the nation, 77 WABC. News Store. From Wall Street to Washington to your wallet, You're listening to The Larry Kudlow Show.
Okay. We're near our end here. Let's see why my thing is not moving. Okie dokie. Let's go back to the current slide. We're just about done. So, again, our goal is to make more money with less risk. We have a number of large seminars. These are an hour and a half. Our next one will be August 19th. We give our full update. Almost all the information we gave for the beginning of the year is good. You might want to review it. And we'll be doing another luncheon in July, and then we'll be doing our 3-stock lunch again. And the easiest thing is to subscribe to our YouTube channel, Henry Weingarten. So I hope you all found it interesting. And as today, as we're recording, the markets are way down. They will obviously be down as we go on, but they'll also be up and down. Great, best markets I've ever seen for trading, but hold the course. So we're going to close in a moment.